Okay, so we're going to do some of the implied volatility searches that we're looking for. So we'll start. So the cost per buy methodology is going. It takes the same. It takes the same criteria. Not exactly the same. Very close to the criteria of the regular one. Actually, go back a little bit. You gotta go back 3 days. I'm also looking for the neural index to be up at least 2 days, but then it's also overlaid with the implied volatility rank, and that's really what we want to be looking at are things that have low implied volatilities. So like Twitter. Well, obviously, Twitter, that wasn't a good one. McDonald's were already in. Twitter's down. It was down over 5% last time I looked at it. It's down 6.37%. So that would be an example of one that we didn't want to take a look at. Let's Twitter. So Twitter was showing that bottoming out. I mean, this wasn't very convincing. I don't think we would have, but implied volatility is relatively low. You can see, on this $6 drop that implied volatility jumped 3 vols. So we're not looking at Twitter. We're already in MCD. Aflac. Wonder what Aflac's doing. AFL. AFL's down just a little bit. Let's take a look at what it looks like. We don't really trade it all that often, do we? I don't remember trading it at all. Really not the type of. Well, let's see. Oh, these are viable markets. Aflac jumping around a little bit, off just a touch. And as we see, Aflac implied volatility for going out for 4 weeks, is 14.94. So that's the rank 14.94, meaning that 85.06% of the time vol is higher. So it gets as low as 1667, as high as 93 something. That's for 4-week vol. Southern Company we looked at yesterday, didn't we? That was what's that doing? I was looking at that for a possible long. Okay, that's not so bad. So we have relatively low volatility and a bullish indication. So, I mean, it's a little bit jerky in here, but it certainly predicted this move up, and we were bullish the utilities anyhow, which is definitely something that we can look at. But what I'm really more I'm looking for some put spread sales. So what we do with that is we go to our IntelliScan, and we open our IntelliScan, and I'm looking for put spread sell methodology. So because on a day like today, trying to sell it when the market's already down anywhere between 1.5% and 2.5%, you're kind of you've lost that. So, but what we can look at, nothing came up. So we didn't see anything that was a good put spread. It was a good bullish crossover yet had high implied volatility. So none of them, and I'm just looking for greater than 50% of the time. So what about selling a call spread? This is the put spread. What about selling a call spread? And we may not find anything. Call spread sell. So this is looking for bearish crossovers. Looking for bearish crossovers with high implied volatility, which we may not get any of those either. Yeah, none of those met. So this is not necessarily, but you're going to have fewer of these because typically you don't get high implied volatility with things that have been bullish and are now turning bearish. So it's down a little bit today, which is good but implied vol, this is pretty midland, right? Gets as low as 1528 and gets as high as 76. So really kind of right in the middle. Let's see what it looks like here. It certainly looks weak. Predicted low was 160.60 and we're about $1.90 or so below that. I don't think that we're going to be able we have earnings coming up on the 25th, so if we sell next week's call spread and we're looking out, I don't want to, well, 62 half, can we do these are 65, 67 half call spread for next week. It's only trading for 33 cents, so let's just say we could trade it for, and this is ridiculously wide. I don't know why they're so wide. Well, I know why they're so wide, because bid-asks are wide. 170 bid at 330, 85 bid at 340, so we're not trading anything like this. But you can see that this would be a good example of something that you could, hey, I got a bearish signal. I don't necessarily want to buy a put spread because implied vol is kind of high in general. And, but can I sell a call spread? This one happened, not to work out, but just because the markets are really wide. Surprising, but it's really wide. It's something that I certainly would not even look at. So those are some of the scans that we're looking at, and that nice overlay to the implied volatility. Trying to load up here.
Thanks, buddy.
All right, so we still have the neural index in here, but I want to see these that are. Here we go. Definitely down, and then equal to. So we're getting more of these because I put the ones that don't have monthlies in there, or don't have weeklies. All right, so it's because I don't have anything in here. So we want this to be greater than 50, and that's probably going to take us out of the game. Yeah, there isn't anything. All right. Well, but that's good that we did that. Any questions on that? On what I'm looking for here? I'm trying to take advantage to see if there's anything that has relatively high implied volatility, but yet not trying to jump on the bearish train when we're down already like this. We're not getting overly hurt. In our, I think we did a good job of managing the swing signals. We still have a few. We have McDonald's, and that's gotta like that. We're long McDonald's from 60, right? It's trading. We're long from 60, trading maybe close to 80 cents. Ross stores. Okay, that's going down a little bit. We're long that from 129, and it's trading there. We already took off Broadcom, and we put on XOM this morning. And that's and we're long that from what, 35 cents? I'm sorry. Sorry, 45 cents. So right where we are. All right, so we're trading just down a dime, and this thing is trading a cent less. So we're all good there. I'll just keep looking for opportunities. Any questions? Anything you guys want to talk about? Good times for that to happen.